Good day, YouTube. This is Jay Money with Falling Forward Financial. Just another video here on Costco. I've talked about them here on the channel before. One of my favorite retailers. I just actually did a video earlier on them as well in a different article along with another stock. I'll go ahead and link that in the description as well, or you can just look through my videos as of today. But this is 3 reasons to buy Costco and 1 reason to sell, so kind of interesting. This was out last week on the 15th. So Costco's core business is well insulated from macroeconomic headwinds. Its membership renewal rates hit record highs last quarter. Retailer stock looks expensive on the surface, and right now it has a $198 billion market cap. Current price is $446.69. This was over $600 a month or two ago, something like that, and it's been going down ever since. So the warehouse club retailer remains a solid long-term investment. Again, ticker COST. So they have endured 4 major U.S. recessions. During the company went public in 1985, yet the warehouse retailer stock has still generated a total return of about 74,500%. Wow. So if you could have bought some of that back in 1985, I don't know how many shares that would take, and you probably could have retired. I don't know what the price was back then, but it'd be something interesting to look into. Since 1985's IPO, making it one of the greatest stocks of the past 4 decades. But can it continue growth as inflation, rising interest rates, and other microeconomic headwinds rattle consumers and the markets? Let's review 3 reasons why I think you should buy Costco stock now, and 1 reason why you might want to sell it. Number 1, its evergreen business model. Costco recipe for steady growth consists of 3 basic ingredients. First, it leverages its scale to buy and sell bulk quantities of products at lower prices than Amazon, Walmart, and other large rivals. So, some other stuff, depending on what you buy, is cheaper than Walmart. It's better quality than Walmart. Not to knock on Walmart, I still shop at Walmart, and I still shop at Amazon. But you just need to watch prices and compare. So I don't think Walmart matches price anymore, but it used to at one point in time. Model also strengthens its defense against online marketplaces, since it's usually cheaper for customers to pick up those large products instead of having them shipped to their homes. Second, it locks in the customers with sticky annual membership plans. It generates most of its profits from its membership fees, and now its low margin retail sales. Profit engine helps it push through inflationary headwinds and cyclical slowdowns in consumer spending. The latest quarter, Costco membership renewal rates hit an all-time high of 92.3% in the United States and Canada, 90% worldwide. Total number of cardholders also increased 6% year over year to 116.6 million. Impressive growth gives Costco plenty of latitude to raise the membership fee, as it is done every 5 to 6 years to offset inflation and other macroeconomic headwinds. Lastly, Costco continues to expand its physical footprint, even as other retailers are shuttering brick-and-mortar stores to cut costs. It ended up the latest quarter with 830 warehouse stores compared to 809 the prior year. And it continues to expand its presence in Europe, Asia, and Australia. Here's kind of a chart. So back in the middle of May, could have got it for less than $420. Had a nice run up to, it's probably about $490 there. And it's coming down currently at $446. There's kind of the day's range, $443 to $455, kind of a $12 swing. 52-week range, $380 to $612. So even if you bought it at $380s, you'd be looking at about a $66 profit. So So not too bad of a return there. It'll get back up to the 600. This one has talked of splitting. I haven't heard any more on that since the prices went down, but I'm sure at some point in time it could split. That would be awesome. Even if it was a 5-to-1 and get the stock down to $100, I'd buy some more of it. So Costco's adjusted comparable store sales, a metric that excludes the impact of changes in gas price and foreign currency exchange rates. It's about the only place I get gas as long as I'm stay in town, but can't do that when you go out of town, but it's the only place I get gas. But here it kind of goes over adjusted comps growth, fiscal 2019, 2020, 2021, and 2022. So pause and go over that chart. The pattern of growth continued in May when Costco's total adjusted comps increased 11.8 year over year, rising 10.7 in the United States, 19.5 in Canada, and 10.1 internationally. So shout out to Canada. I do have some people watching my videos in Canada, so that's always cool to see people outside of the United States watching. So if I missed you, if you're in another country outside of the United States, you can list that in the comments as well. But I think about 9%, almost 10% of my people watching are from Canada, so that's kind of cool. Reason to buy, number 3, stable operating margins. Inflation, which recently hit a 40-year high, yay! In the United States will likely be a near-term drag on Costco's gross margin. However, inflation could also generate revenue tailwinds for the warehouse stores as consumers purchase more products in bulk. To counter soaring costs, the company can also continue to offset its rising costs with its membership revenue. Adjusted gross margin, which also excludes gas prices changes, declined 17 basis points year over year to 11.05% for the first 9 months of fiscal 2020. Number 1 reason to sell Costco is its evaluation. Analysts expect Costco's revenue and earnings per share to rise by 15 and 16% respectively in fiscal 2022. Next fiscal year, they expect its revenue to grow 8% and earnings per share to increase 10%. That would be impressive growth, but Costco's stock already trades at more than 30 times next year's earnings. Walmart, which owns Costco's warehouse club rival Sam's Club, and Target currently trade at 17 and 11 times forward earnings respectively, so that's quite a difference. Costco's higher valuation could limit its upside potential in the volatile market, which favors cheaper value plays over stocks with a premium. Therefore, it might be prudent to wait for a pullback instead of going all in on Costco as a recession-resistant long-term investment. It looks like the strengths still outweigh the weaknesses. Costco still isn't cheap, but I believe it deserves a premium valuation. This business easily withstood previous economic downturns and will likely emerge from the current inflation cycle as much stronger retailer. Investors can accumulate some shares at Costco right now, but they should brace a lot for the near-term volatility to be ready to add more shares if the price tumbles even further. So I just been watching it to see how far it goes down. I did buy some, not a lot, but I saw it go down and didn't know how much further it was going to go, but I'm still in the green on it because I hadn't bought any Costco for a while, so I'm still in the green on it. I'm not sure what my cost basis is, but last I looked, I think it was up over 100% return, so can't complain about that. But that is the 3 reasons to buy Costco and 1 reason to sell. You can list your own reasons to buy or sell in the comments. That would be interesting to know as well. And if you have a favorite retailer as more than Costco, whether it be Walmart or Target or whoever else, you can list that in the comments as well. Maybe I'll take a look and do a video on that as well. So Again, I don't give tax, legal, or trading advice, just state my opinion, and if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing, and hit the bell so you're notified of when the next videos drop. Again, this is Jade Money, following Ford Financial. Happy trading, happy investing, stay green. Cheers.